All right, let's just get right to it. It's the one question that's probably on every single investor's mind right now, especially with falling prices and, let's be honest, a lot of fear in the air. Is it really game over for Bitcoin? Today, we're going to break down the big picture economic threats, the futuristic tech risks, and some really surprising history to figure it out. So it all really kicks off with this huge shift we're seeing in the market. I mean, for the first time in a long, long time, old school assets like gold and silver are putting up numbers that, well, they look like something out of a crypto bull run. So the first thing we have to ask is why? Why is all this capital suddenly running away from digital assets and back to physical metal? And, just to make things a little more complicated, there's this other shadow kind of looming on the horizon, a technological threat that some people think could literally undermine the entire foundation of Bitcoin itself. So what on earth is going on? To really get what's putting all this pressure on Bitcoin, we first have to zoom out and look at the bigger picture, because this isn't just a crypto story. Not at all. It's about a fundamental shakeup in the global financial order. And it all started with one single powerful political move. $300 billion. That's the number. And this is the number that sent an absolute shockwave through the world's central banks. Back in 2022, when the US froze that much in Russian assets, countries all around the world had this huge wake-up call. They suddenly realized, hey, wait a minute, our US dollar holdings, they might not be as safe from politics as we thought. And wow, the reaction was immediate. I mean, just look at this chart. Before 2022, central banks were buying around 450 tons of gold a year. After that freeze, boom, the number more than doubled to over 1,000 tons a year. We're talking nations like China, India, Poland. They all started stockpiling gold at a rate we've never seen before. Now, this isn't some random panic buy. Oh no, this is pure strategy. China has been very open about its goal to make the yuan a global reserve currency by 2049. And think about it. How do you get the world to trust your money? Well, you back it with a giant pile of physical gold. This global gold rush is acting like a huge vacuum, just sucking up liquidity and attention from everything else. And yeah, that includes Bitcoin. So this all sets the stage for what is really a perfect storm. Right now, Bitcoin is caught in what you could call a pincer movement. It's getting squeezed from two sides at once, from the old world of finance and from a new, almost sci-fi kind of threat. Let's break down exactly what that looks like. And this lays out the two fronts perfectly. On one side, you have that old world threat. All this money is rotating into gold, which is seen as both safe and high performing right now. And on the other side, you've got the new world threat, the rise of quantum computing. So what is this quantum threat really? Well, simply put, quantum computers are this whole new kind of supercomputer. They're so powerful that, in theory, they could just shatter the encryption that protects basically our entire online lives, from our bank accounts to, yes, the private keys that secure your Bitcoin. But the biggest fear here isn't just about someone hacking an active wallet. The real narrative, the one driving all this fear, is the idea that quantum computers could get access to the millions of lost Bitcoins. We're even talking about Satoshi Nakamoto's original stash. I mean, if 20% of the entire supply suddenly flooded the market, it would be an absolute catastrophe for the price. Okay, so that's the bearish case. It's the doom and gloom story. And it sounds pretty convincing, doesn't it? But let's just pause here for a second and ask a really critical question. Have we seen this kind of existential, the sky is falling crisis before? The answer is a huge, resounding yes. Just take a look at these names. Amazon crashed 95% during the dot-com bust. Meta fell 76% when everyone was calling the metaverse a total failure. Nvidia dropped 66% amid all the cries that AI was just a bubble. Apple was nearly bankrupt. Every single one of these giants faced a moment when the market basically declared them dead. So how did they survive? What was the secret? They ignored the noise. They were absolutely laser-focused on their product, on their mission, on their technology. They didn't let the short-term panic of the market derail their long-term vision. And that brings us right back to Bitcoin. Yes, its price has crashed hard, but its protocol, the actual underlying technology, it hasn't. The Bitcoin network has never been hacked. It has never stopped processing blocks. For over 15 years, it has just kept on chugging, operating exactly as it was designed to, day in and day out. You see, this distinction, the difference between the price and the protocol, it's everything. It's what allows us to zoom out and actually get a long-term perspective on all this chaos we're seeing. In fact, this isn't even Bitcoin's worst crash, not by a long shot. Just look at the history. It had an 84% crash in 2018, a 78% crash in 2022. So today's drawdown, yeah, it's painful, but it's really part of a reoccurring pattern for this kind of volatile asset. And after every single one of those major crashes, it has eventually gone on to make a new all-time high. There's a really great way to think about this. Investing in this space can feel like you're watching two different movies at the same time. If you only look at the short-term, daily charts, it's an absolute horror movie. But if you zoom out and look at the long-term, multi-year chart, it starts to look a lot more like a romantic movie. Which brings us to our final question. And it's really the key takeaway from this whole thing. In an asset that is literally defined by extreme volatility, where should you focus your attention? When it's all said and done, is the real signal the ever-changing price or the unchanging protocol? That's the question to consider.